Hey, what's up, everybody? Welcome back to another episode of Filling Your Cup. I'm your host, Calvin.
And I'm your other host, David.
All right, and today we're going to talk about dividend investing. All right, so let's get to it. So what is a dividend? All right, so a dividend is a distribution of a piece of the company's net profits to its shareholders, me and you. So public companies are not required to pay dividends to the shareholders, but the decisions are made by the board of directors. Basically, reward the publicly traded companies to the shareholders for putting their hard-earned money into their company. Dividend payouts can be paid in monthly, quarterly, or annual distributions.
All right. So I guess the biggest question when it comes to the dividend is the taxes, right? Like how are the taxes handled? So dividend income is taxable, but it's taxed in different ways depending on whether the dividend is a qualified or a non-qualified dividend. So a non-qualified dividend are such as paid by those real estate investment trusts, and those the REITs, they are usually taxed at a regular income rate. So a qualified dividend is taxed at a lower long-term capital gain tax rate instead of the higher tax rate, which is like the ordinary income. Um, so to be eligible for the special tax rate, a dividend must be paid by either a U.S. company, a company in U.S. possession, a foreign company residing in a country that is eligible for benefits under a U.S. tax treaty, or a foreign company stock that can easily be traded on the U.S. stock exchange. That's fair enough. So most stocks dividend would qualify. So a caveat is that these dividends must also meet the holding period requirement. Usually, the stock must have been held in excess of 60 days during the 120-day period, beginning 60 days before the ex dividend date. We will go over what the ex dividend date more in the later slide. So basically, most stocks you have to hold it 60 days prior to getting the dividend for it to be considered a long term to be for in order for it to be considered to get taxed at the long term capital tax rate. Yeah, that was a tongue twister. So yeah, and for other for another type of dividend, like the preferred stock, the stock must have been held in excess of 90 days during the 181-day period. So different so there are different types of paid out or stocks of dividends, and depending on which one you have, there's different requirements basically. So the taxes. So for qualified dividend taxes, they are tax free for individuals in a 10 and 12% tax bracket. Yippee! And basically for people who's earning less than $40,000 a year. For individuals, that's in the 22, 24, 32, 35% tax bracket. Dividend long-term capital dividends receive a 15% tax rate, flat. And dividends are taxed at 20% rate for individual whose income exceeds 434,500. So those are the people who with the 35, 37% tax bracket. So it's pretty similar to the regular long-term capital gain tax. Same idea, and it's a little chart of the breakdown for you. So Calvin, enough talking, right? Let's get back. Let's get into the skin of this. What is a really popular dividend stock?
All right, so although there are many dividend stocks out there, one that we feel that is highly sought after or a very popular stock is AT&T, or ticker symbol T. As you can see throughout the years, it's pretty consistent payout in terms of the dividends, but their most current yield is 7.2%, or about 52 cents per share. So let's crunch the numbers real quick. If you put in 10 grand of your hard-earned money into the stock at the current stock price of $29, you'll be able to get 344 shares. So 344 times 52 cents, and you'll get a so approximately $178.88 per quarter. So every quarter, 4 quarters a year. So annual payout, it's $715.52
That's
a year.
that's pretty good, right? That's
It's really good. It's really good for just having your money in there. But pay attention to the first column, the ex dividend date, as Dave mentioned earlier. In order to receive your yield or your dividend payouts, you have to make your purchase, or you have to buy into the stock before the ex dividend date. So this year it's already passed. So January 7th, yeah, or January 8th, you have to buy your stocks or be in that position before that date. If you go over to the second to the last column, that's the pay date is pretty self-explanatory. That's when you get paid your dividends. So yeah, it's a good way to add to your portfolio.
so yeah. What's our thoughts in dividend investing, right? So to me, dividend investing is basically kind of like it's like a passive income, right? You buy it and you kind of forget about it. The good thing about the great thing about dividend incomes is that every quarterly, if you get paid out quarterly, you get a paycheck or a dividend check from the company, right? And so it's not something that you worry about. And at the end of the year, you get that for AT&T, you get the average 7.2%, and anything that's appreciated, right? Because the stock itself can appreciate. It can also depreciate, but usually in this market climate, stock tends to go up. So you get the 7.2% average, and you get the appreciation on top of it. So this is kind of like it's like a really good passive income stream. A lot of people, when they buy like a home as like an investment, right? In order to generate a passive income stream, which is monthly rental income. That it is passive income, but you ask a lot of homeowners, it's not really that passive because there's a lot of work coming that you have to put into it, right? Because what if your house, anything that breaks down, you have to pay for it. You have to deal with tenant issues. So it's not really that passive in a sense, right? And a lot of people, like, their goal is to like have a really big dividend portfolio where they can just retire off the dividends they get pay out each month. And I think like a lot of a lot of people who are invested in dividends, they're seeking out like $5,000 to $10,000 of dividend a year. I mean, not a year, a month payout, because of the schedule of how it works. You get paid out throughout the years. Even though it could be 4 quarters, every company is different, so it's not always like January, March, June. It's not always that. The dates will change. So if you buy enough of dividend stocks, you can technically get payout 5Gs a month, which is can you retire off that, Calvin? $5,000 a month off dividend. Pretty good, right?
Pretty good.
So my thought on it is I have some dividend stocks myself. I think it's a pretty good strategy if you want to be hands off in investing, and it's just like another vehicle of investing. Like, there's just so many different vehicles, and this is just one of them. So Calvin, what do you think? What do you think about dividend investing?
I agree. So it's a great way to kind of round out your portfolio. Like I said earlier, it's good to have your high risk stocks, your speculative stocks, high risk high reward stocks, your growth stocks, and now the dividend stocks is it's a great way to kind of balance your portfolio, minimize risk, and like the one of the most successful investors out there, Warren Buffett, the OG, has millions and millions of shares of dividend, just collecting millions and millions of dollars, just hanging out of dividend income. So buy and hold forever, but it's you invest at your own risk and your own strategy, and dividend stocks are one of the ways that you could invest and be successful and make money.
Exactly, and a lot of investors, they like dividend because they get that paycheck. They get the gain on a quarterly basis or monthly basis, and you don't have to wait until they sell the stocks. So like for us, a lot of our stockholders, right, we don't reap the benefits until we sell. And a lot of people, they don't like to sell because selling, and I mean, selling means yes, you're constantly managing your portfolio, and it's not something that people like to do. They don't like to constantly buying and selling positions, right? So if you can own a dividend stock that pays like a pretty good yield, and you get to collect it on a monthly or a quarterly or annual basis, so why not, man? Like there's like a lot of good dividend paying stocks out there, and you could make a substantial lot of return on just dividends itself. Even though it might just be 7%, but at least that's 10%. That's you're seeing coming back to your account, and you can reinvest those dividends into like the stock. So that's kind of how that's how you can compound your gains by reinvesting what you made. Like what normal business do, right? They get the gains and they reinvest it back in the company and help. That's how it grows. So in the long term, your 344 shares of AT&T down the road, that would literally grow itself to like 500, 600, 1,000, 2,000 shares down the road. It just takes time. And of course, dividend, nothing lasts forever, right? Companies company could stop paying out dividend, but if you buy if you buy like a really good company that's been paying out constantly throughout the years, like AT&T, they're not going anywhere, dude. They're not going anywhere. The dividends will continue to flow, and you get to collect money on it. So Calvin, any closing thoughts on dividend investing?
I agree. I think you again hit the nail in the coffin. A nice wrap up. Again, just it's a good revenue stream, and it's that concrete piece of like a check that you get, like you said. So it's that concrete feeling that, hey, security that you get from every monthly or every quarterly that that you don't get from stocks necessarily, because stocks go up and down, and if you don't realize those gains, it's just imaginary right now. So and that's dividends. That's where dividends come from. You don't have to worry about the selling. You get that concrete piece of security.
Mm-hmm. Mm-hmm. Yeah, I mean, we're a fan of dividend investing. Then we both own some companies that pay out a dividend, which is like a bonus on top, and although these companies aren't gonna be like heavy hitters, they're not gonna gain 30% in a day. Usually, these are the more stable companies who are these are the OGs, they're like just consistent. Their name is consistent, basically. So it is a good. It's basically kind of like owning a rental property and collecting monthly rent checks, except without the maintenance. You don't have to worry about the tenants. So closing thoughts. We're both fans of dividend investing, but invest at your own risk. Do your due diligence. Don't just listen to YouTubers telling you what to buy, but this is just another type of investing that you could be doing. The worst thing you can do is leave your money in the bank, because you are technically losing money to deflation every second that the money's in there. So invest in something. I don't care what. Yes, you invest in yourself, but that's too cliche. I'm not gonna say that, but invest in something. Invest in a vehicle that can ensure that you retire as a pretty comfortable situation. So like always, please like, comment, and subscribe, and we'll catch you in the next video. Peace.